Well, good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 22nd of May, 2023, 6:40 p.m. Central Time. Yep, I'm back, got refreshed, went down to gorgeous Florida. Interesting time there. I saw a housing market so strong, it's insane. I happen to be in Boca Raton with my friends, and I mean, it's insanity. 4 years ago, homes down there that might have been in the $600,000 to $800,000 range, because Boca's not an inexpensive community. I thought those, I looked at them and I said, oh boy, they're nice homes, but not great homes. They're not on the water. They're typically a block or two off the water. Many of them older homes at that point. Well, you should see what they do. They go in, they buy a home, they rip it down, they put up one of these Miami Vice style homes, very modern, very beautiful. And I'm going with my friend, he's driving me around, and I go, so how much are these homes? And his kids live there, so he knows. They moved there in the past 2 years. And he goes, okay, that would be $4 million. This would be $5 million. My jaw's dropping in the car. I go, how much money? He goes, oh, yeah. He said, I know what you're saying to me, but when that COVID happened and everybody came down, prices went crazy. And he said, Ira, let's just drive for a moment. Every block we're going down, they're either ripping down a home, they're remodeling homes. It is though there's so much money in America, I don't get it. And you feel poor instantly as people are just doing this. And a lot of them are young families. You should see, normally at this time of the year, I'm versed in it. You see people, their cars are gone, the people are gone. Getting into a restaurant, forget it. And I'm talking during normal times here. Forget it. This is normally when the tourists are leaving. People are going back home to be with the families. They're staying. And I got an education. So anyone that thinks the communities in Florida are in trouble, they have another thing coming. I saw firsthand. I admit it's a small microcosm. It's not everywhere. You don't have to write me about that. I get it. I also get that I wasn't sitting in the $30 and $40 million homes, comparing those on the water to what's across the street. But it's insane, all right? And I know this area real well. I mean, beyond what, my friend has lived there for probably 20 years. So he hops in different homes. It's insane. All right. I'm a little late because Speaker McCarthy was speaking, and I wanted to hear what he said as he came out of the White House. It's 6:20 p.m. Central Time. It's 20 minutes later. I don't understand what they're all agreeing on. I admit to my confusion. I need help. I'm not saying that facetiously. He comes out. The tone was good. There was a lot of honesty. Are you going to increase taxes? No. This was the question, his answer. Are you going to increase spending? No, we're not going to increase it. It has to be cut back. Okay. Are you willing to waive the 3-day rule in the House when the bill gets, whatever, if they can reach a bill, and get it to the floor for the members to see? No, I'm not willing to do that. And it's point after point. I'm going, well, what is he negotiating on? Because everything was no, he's not going to do this. Now, admittedly, that was his point of view, his press conference. I'm sure the president's will be a bit different if he decides to come out and have one, which I haven't seen at this point. But in all honesty, if everything's a no, we're not going to do that, how are you going to make headway? I'm not saying he's right or wrong. I'm bringing that question out. What's going on in the market, and it was nice to go away because you get to clear your head. The market doesn't care that the S&P earnings are historically high at 18 times earnings. Doesn't matter. The market doesn't care that there might be a calamity off the debt ceiling. The market only cares that the Fed is very, very close to a pause on interest rates. That's what the market is focused on. Went away, it's pretty crystal clear. Does it mean you have to agree with it? No. Does it mean that you're going to bet against it? If you do, you've been getting killed. You don't want to bet against it. This is the way it's going. The gold is coming down because the dollar's been going up. The currencies are down because they're looking like I am in certain markets. Does this sound like a deal? And obviously the dollar would be up if there is no deal. Currency's down, and the headwind of higher interest rates or whatever the Fed's going to do combined with the dollar would weigh on the gold. I get it. trying to incorporate why the stock market is making the move that it is right now, please don't be foolish, okay? Give up on it. The trend is up in most of the stock indices overall. Don't fight it. So when I come to the gold market, and here's the weekly chart of closes, the market could easily get down into this 1941.30 if it wants to, a corrective move, but still staying over the bullishness of staying over the 18-week moving average of closes. When you look at a daily chart, the market came down, and in the 2 days I was gone, it got hit rather hard. The pattern has been one of lower highs, lower lows. The resistance is the 18-day average of closes now at 209.80. The trend is down. The bias is down. Supports a combination of the 100-day average at 1950.90 to the lower Bollinger Band, 1955.70. And you might even develop an embedded reading, which would be even more bearish. Let me point this out. It takes both numbers to be under 20 to be embedded, but you can't count tonight. We don't know where Tuesday's going to close. So the first day of embedding was just on Monday, and if you go back to Friday, you weren't there. All you have is an oversold market that can't embed at this point. It might have to reach down into that number to find the next layer of support. Is there anything on the chart that could be bullish? Well, if all of a sudden the market reversed course and closed over 209.80, yes, that would get me into the bull camp. The gold-silver ratio, as long as you stay over the red line, which is the 18-day average of closes, that means that I have a bearish bias to silver and a bullish one to gold when you compare one to the other. And as you can see in silver, you're in a bear market case that has the embedded reading, that is fighting for its life temporarily against the combination of the 100-day average and the Bollinger Band. If that gives ground, you might sink to the 2305 level. This is likely where traders are saying, okay, I'll do some short covering, but I don't think they're giving up their whole position here because of the embedded reading. There you have it. Let's go back here one. In the copper market, you are getting to the point where the 18-day average just now, literally tonight, got over the 200-day average. So that's a bearish crossover, and immediately the market's probably going to try to come down and challenge those lows. Are we embedding for the bearish reading? Again, you can't count today, but you can go back to Monday, both numbers under 20. Both numbers were not under 20 on Friday. So similar to the other pattern that we have in the gold, oversold market, not embedded, might want to reach down here to the lower band, doesn't have to, and it's got a pretty strong resistance point now at the 379.70 to, let's call it 378 level. In the platinum market, you had broken down to the 18-day average of closes, got under it. In the process, you created lower highs, but you kept higher lows. And now with the rally today, you got higher high, higher low. If you stay like this, you're back in the bull camp. And if you're in the bull camp, you need momentum to turn up a little, and then you're back to the 1,115.60 would be the resistance, and neutral zones 1078.90. In the palladium market, you're still in the bear camp. So it's only the platinum that is friendly. You still have the lower highs, lower lows, momentum down, bias down. Trade is probably still selling this market short here with stops right over that high of 1535. And last in the dollar index, well, you've developed your embedded reading. You got a bullish reading. If and when this red number closes under 79, I will then say, I think the market's ready to correct. Until then, no. So it's a strange story, but it was that way before I left, and I'm glad I went and cleared out my brain. The stock market's in its own world. Don't relate it to everything else. It's going to confuse you. All right, it got me confused. It just wants to be on that own world. These other markets are paying attention to how the negotiations are going on the debt ceiling. We'll see what happens. You know, traders have decided that this is a replay of 2011, where with 48 hours left before we were going to go broke, a deal was struck. That is what they're counting on. They're counting that there can be all this talk, but at the very end, there'll be that negotiation. One final part. When asked, would there be an extension by the press today. Mr. McCarthy didn't say there wouldn't. Here's what he said. He said that would be a failure. Okay. But he didn't answer the question. That's what politicians do. You leave that door open if they can't reach anything. I was disappointed to hear all the other parts, but of course we don't get the details. We will see what that is. Want to remind you, if you like these indicators and you want to use them, and a lot of you use TradingView, we make this available on TradingView. It's one of the suite of indicators we put together. You get 6 of the indicators. You're going to get the swing lines, of course, the way that I do them. It's all going to work for you there. The moving averages I use, they'll come out there. You're going to get the Bollinger Bands. You're going to get the slow stochastics, the window envelopes as I plot them out, and outside days. You can turn that feature on and off, but it's important to see the outside bars for the continuation signal or the violation of it. It only uses up 2 of your 5 suites, okay? So you can do many more other things you don't use much. The reason it's 2 out of 5, the slow stochastics in and of themselves, as you know, reside on a slot on the bottom of the chart. You get 5 slots on TradingView for those of you that have it. You can go to our website. Under software, it's there. You can click up here at the top. It'll take you right into that. You sign up on our website, and then we activate it for you there. In the meantime, I'm Ira Epstein. You have a great day. I feel very refreshed. Let's see where we go with all this, and I will see you in the morning.